It was good, bro. All right, let me just send these links out real quick. I know you be on it, bro. Yeah, I appreciate the support though, for real. Was good, was good. All right, so if you guys want me to mark up any particular pairs, just let me know in the comments. My computer been lagging, so I'm trying to figure out how to make it smoother when I'm doing these recordings. Yo, what's good, Chris? It's good, Ryan. So if you guys want me to mark up any particular pairs, just let me know. So right now I have up GJ. Damn, we got a crazy ass gap right now. All right, so let's start from like the daily time frame, marking this up. GAUEDXY All right, bet. So overall, we had this higher time frame look up here. So let's go to the H4 and try to fine tune that. All right, then we got the daily. So overall, I mean, we got past this. So let's see. We potentially mark this level off. All right, so we can overall have like a potential daily range like this. Now with this gap, we basically broke past the last higher low that led to a higher high in the overall impulse leg structure. So I believe, you know, price will fill this. I believe price will fill this, but you know, we potentially could still roll over to the downside. So as far as you know, how my market would be for this pair, it would be H4 zone based off of these wicks right here. So this shows you exhaustion. It shows you that the market could no longer maintain the bullish momentum in this area. All right, and then we kind of want to just watch how structure is playing out, right? So you can see the overall buildup. You know, price started more consolidating than, you know, moving in big strides. All right, so we get this high here, we roll over. So you can see price action structure also switch up here at the top. Once we got that break right there, we transitioned, right? So we stopped maintaining bullish price action structure and we broke to bearish price action structure. Somebody want US 30. All right, I don't trade it, but I'll analyze it for you guys. All right, so we also broke another minor level of support right here. So we consolidated, broke through that level. And you can see we literally just gapped all the way past several levels of support. All right, so overall, like I said, I do potentially think we'll fill this gap, but we could roll over to the downside, bounce off of this daily zone, and then head back up. Or, you know, price can just kind of pull back right now. So with gaps, I usually just stay patient and just, you know, allow the market to tell me what it wants to do. I could look for, let's see. Basically, I would look for any other interactions that could lead me in an overall direction of what the market may want to do. See, so like this looks like a triple top or something to roll over, so it could be a whole reversal. I know we're playing off of like a weekly time frame zone up here as well. So this could be the overall rollover that starts to retrace. Because if we look at the daily, this thing has just been pushing up for a minute. So we have a lot of space that we could potentially retrace, especially just on the daily. So if we call this our last, higher low to higher high up here, we potentially could roll all the way down, to this area before even potentially breaking structure on the daily time frame. All right. So like I said, I keep my charts very clean. I allow price to do what it wants to do. And the thing is, so yes, we have a zone all the way up here, but as price moves, is going to create new levels for us. So let's say this fills in, it potentially can give us another bearish rejection, similar to, the bullish bearish rejection here. We'll draw a new zone off of that point there. And from that zone, we can now ride the market down. Okay. Now, vice versa, if it does give us a bullish candle close and it's kind of maintaining price action higher lows, we know that it's potentially going to push back up to this overall higher time frame zone here. All right, so that kind of gives us, our overall market direction is how these candles are going to form during, New York session tomorrow and so on. All right, so overall, let's check out EUR USD real quick. All right, so we can see we overall had a daily zone based off of here that price reacted off of. If we zoom out a bit, we can definitely tell that price was bearish. It's been in bearish momentum since we had this transition over here. All right, so it looks like we did some kind of double top here. And once again, price gapped on EUR USD as well. So we would have had a daily zone in this level right here. You can see we just literally gapped under that level. So we do have a level of some kind of support here that I'll keep an eye on. That could potentially cause the retrace, whether we break back above this, retest like previous wicks and then continue, or if we just, consolidate here and fall. All right, so overall, let's change these zones. We can do red. Let me know if you guys have any questions as well. So we can do red, and then, so our last rejection from exhaustion, oops. Hold on, let me see. Thought I clicked the box. All right, there we go. So our last rejection on the H4 was from right here. And if we drop down to like, let's say the H1, you can see, that's the last place that price found a strong enough resistance to maintain. And then this gap happened. So if we look at the candlesticks, right? We look at the candlesticks of what happened here. We can see that the market started just moving sideways. The buyers started losing steam. Okay, we get a big bullish candle and then it literally just halts and it moves sideways. This is telling us something. This is telling us a story, right? So this is telling us that the sellers are coming in at this level and that price can no longer maintain, pushing higher. We upload this stream on YouTube when it ends. Yeah, all my streams will be uploaded, or it automatically does it, but basically it takes a couple hours for them to publish it and all that because they got to optimize it. But yeah, everything's going to be on YouTube. But we know from, how I read structure overall, we had this impulse lower high to a lower low here. Now, the reason I wouldn't call this a lower high is one, because this is the only bullish candle that came off of it. The rest were dojis right here. So these two candles cross out. So this will be a bearish bullish pattern. So we wouldn't count that. We would count this as the overall lower high. Now you can see the price broke above price action structure, which could have faked out a lot of people, right? So if it breaks above, you could potentially think that it's going to be buys in the market, but overall the market was still bearish, which is why we got that huge drop, we got that huge gap. So, gosh, hold on. All right, there we go. So overall, looking at this pair right now, like I said, it did gap under this level fully. I do think this gap will be filled, but once again, it just kind of depends on the timing of the market, like when the market actually wants to do it. So this is just a little bit of a better example of our zone that price hit right now. So if we just filled this price action in with a candle, right, we would see that this is simply just, a lower high to a lower low. Okay, so depending on how this candle closes here, we can have a lower high to a lower low, lower close than the previous push on the H1 time frame. So this could be just an overall continuation. Oh, no doubt, you already know. Yeah, I'm not sure what happened to cause these gaps though. I'm interested. Like, if any of you guys know, let me know. Maybe it was some news that came out or something. But yeah, from this double top up here, it looks like we have a lot of bearish momentum coming into the market. Yo, what's good, Malo? Yeah, so I'm definitely interested to see how, the markets play out. All right, we also got this like bearish, bearish continuation pattern here. It's not really showing us, seller's exhaustion here, you know what I mean, or buyer's exhaustion. But, the fact that we were already in bearish flow, that could potentially tell us that, the market's going to continue bearish. So that's something I would look out for. Like I said, with the gap, it kind of makes analysis a little bit harder. But this is how I have my chart marked up. If we break past this point here, I'd overall move my zone potentially there to see if we can get an interaction and a rollover. All right, so let's see. EU, let's do GU, and then we'll do AU, then we'll hit US 30. So I'm pretty sure AU is going to be similar. Man, that's crazy. AU straight retested a shoulder of a head and shoulders pattern, made another head and shoulders pattern, and then dropped. All right, so let's highlight that as the daily levels. Off of these wicks, I'm just going to highlight the bottom of the wicks here because I'm pretty sure the H4 zone is down here or here. So let's drop to the H4. We're just fine tuning our levels. So now we got our trading range, right? So we overall understand we came from this overall higher time frame push up here and we went bearish. All right, so now we're kind of in this consolidation area. So basically, when you're in a consolidation area, you only want to trade from the extreme highs or lows of that area, if that makes sense. So what I mean by that is you want to find, the levels at the edges of this consolidation box. So let's just color that yellow. All right, so we see that the market keeps retesting these highs and these lows. So what does that mean? Usually when there's a consolidation area, it means that there's a bank or several banks that are fighting for a better price. Okay, so for an example, when price pushed up here for this wick, an institution or a hedge fund, whatever it was, thought that this was going to be the best price before price rolled over to the downside. So they spent a lot of money, millions of dollars, to drive price higher to 1.40044 than these wicks over here at 1.39981. Now literally this is millions and billions of dollars that had to come into the market to make this happen. So price rolls over. Look what happens though. Another bank steps in, you know what I mean? So another bank beat a previous bank's price. So when you see these wicks, these are signals, okay? These are signaling liquidity. these are signaling that, the big players are in the market. So when you see these levels, you want to mark them off and potentially trade from those levels because the banks are trading from those levels. You don't want to trade in between all this, nonsense if you don't have to. All right, so overall, we can see price on the AU time frame, or I'm sorry, AU pair on the H4 time frame. This is H3. Let's check out H4. So we can see our zones from here, right? So if price comes down and taps our zone, potentially we can see a roll over to the top side. So basically what I want to see here is a strong rejection. Okay, so like I would need to see break structure on lower time frames like the M5, maybe even M15, and then we'll potentially see price bounce up to the highs again. Now, price can also just break out of this box whenever it wants to because, we overall came from a downside momentum. All right. So let's check out like the daily time frame and the weekly just to get an overall better picture. Now we did see that we did see that head and shoulders pattern right here inside of a bigger head and shoulders pattern. So that does make me think we could potentially push lower. We're just in a lot of like sideways movement right now. So once again, it's similar to AU. It's not showing buyer strength or seller strength in this area. It's just like consolidation. So even let's roll to the monthly, see if we can get a clear picture somehow. All right, so when we check out the monthly, we just closed, like last month we closed a candle with a long wick to the top. Okay, so I want to scroll out and see what's to our left. So overall, you can see we actually had a level or a zone of exhaustion on the monthly time frame. Now, I'm sure within this, we had a smaller level on the weekly that potentially got hit and started rolling to the downside. So with that in mind on lower time frames, this could be it could be a lot of bearish momentum coming into this market to roll over. Think about it. Now, as intraday traders, for an example, we're trading smaller time frames. We're trading, H1 pushes, H4 pushes. But the swing traders, the people with the big money, they're trading the higher time frames. They're trading the yearly, monthly, weekly. Okay, so when they see the same typical setups we look for on lower time frames, for example, the exhaustion, right, off of levels to get retested. So for us, we look at daily reversals off of these zones. For them, they're looking at monthly reversals. So while we're catching maybe 100 pips, they're catching thousands, okay? And that's just to the last higher low here. All right, so for us on lower time frames, we have to be able to understand and trade overall with the higher time frame momentum as well. So with us knowing that, what we want to do is kind of understand the structure that we are in right now. So we overall had this this higher low point, and this technically, like, to me, this would be more of like a price action higher low. Like the actual higher low would be like over here somewhere for me, because this was once again a bullish bearish bullish continuation pattern. So you take out the doji, and same thing for this area here. This would all be more like one push. But we are getting bearish price action, which means that we're breaking past support levels, which means we potentially want to roll over lower. So if we do break out of this box, we'd obviously come into this area here. And once we're into that area there, that's where potentially, we could see, price reject and push back bullish. But so as long as we're on the lower time frames, like daily, H4, H1, what we want to do is find points of interest, right? So we overall have this consolidation zone here. So personally, I honestly would not be touching AU until it makes a decision. You know what I mean? So we are in bearish market flow. So I would more want to take sales from this high than buy this low, because like I said, price can technically break out at any moment that it wants to. Okay, like we're playing with the higher time frames now, which means if a hedge fund puts in billions of dollars trading the monthly time frame, this can easily just be smashed through, and you're just sitting there buying it, as an intraday trader. So this looks like a higher time frame move for sure. So overall, my chart will look similar to this. Honestly, I'll probably just remove my daily zones and just make the yellow ones my daily zones, because it's basically the same levels. So that's overall what I'd be looking at on AU is a retest of here, or a breakout of here and some kind of retest with the zone to take it lower. All right, so let's check out. Let's check out DXY and then US 30. So most of these markups too, like it's just like back testing with students, like the personal mentorship and all that kind of stuff. So let's see. All right, so overall we have daily support. We have some form of daily resistance. So then let's change the color of our zones. All right, and then we'll go to the H4 to fine tune it. So when we have a lot of wicks like this for our zones, what I usually do is just try to find the highest body, and then I kind of fine tune the zone to that area and then touch the top of the wick as well. And then same thing for the bottom here. So this wick over here was actually lower than this one. So I would like to highlight that area for sure. Now we can see here that this looks like an overshoot, right? So it looks like, price tried to shoot up out of this area and then, it rolled back inside. So this is the DXY. This looks like it could potentially be trying to push down, which is kind of weird. Let me see. So I guess the DXY, did it gap? Yeah, it did gap. This is weird price action. Hold on. Yeah, that's pretty strange. I mean, unless the DXY, just hasn't opened yet, but on the higher time frames, like the daily, it looked like a gap. So you see where this marker is, so 91.744. It's saying that the market gap down, and EU also gap down. So potentially, I think, the market just hasn't fully opened yet for this one. We just got to see how that opens up, because the close is a little strange. So I'm gonna skip DXY for right now, just because I don't know what is happening with that gap situation. But overall, we did reject from daily resistance. We tried to overshoot it. We fell back inside of it. Overall, my last higher low point would be this point right here. So until price breaks that, we can maintain bullish momentum. So let's mark that off. Actually, we can put a line there. Now, keep in mind, price action structure actually broke bullish with this huge push. So if I wanted to draw a zone, it would have to be on the top side as resistance until we break price action structure back bullish. All right, so I would trap price this way. All right, and then let's actually do US 30. Like I said, this one is still kind of weird right now with that gap situation. All right, so let's clean this chart, and then let's go to the weekly. I think this one has been like crazy bullish as well. Yeah, it's really nothing to the left. So all right, so let's mark off this area right here, which is our high. So we already broke past this little stumble, like sideways consolidation movement. Let's mark off this right here. And now we're kind of getting to our areas of interest. So overall, Price action is bearish on this time frame as well. We actually broke the last higher low, so we're actually bearish right now. So as you can see, we did a double top formation from the high. So we broke that support level, which started transitioning us into bearish price action structure. So we overall had a new low here, which was a higher low to a higher high. We just broke through that, and then we retested it with the bearish bullish bearish continuation pattern. So overall, once this market opens up, potentially what we could see is a retest of this resistance, which is the same resistance I'll be drawing my current zone from here. Let me change the color of these. All right, so we could potentially get a retest of this zone here and then a continuation to the downside. This would definitely be a level of support I could see getting hit, and then maybe some sideways movement before pushing lower. Also, what I would look for potentially is, let's see. Yeah, the daily doesn't really have much structure, but let's see. The weekly did close with the long with the top bearish candle. And it kind of looks like we already retested this as resistance. So yeah, potentially we could roll to the downside all the way to this daily zone down here. I would definitely want to see both of these levels of support smash through first. So if you do take a sell potentially off of a retracement, this would definitely be my first take profit. This would definitely be my second. And then if we are able to break through these levels, retest, and follow through, then I would definitely be looking at this for my final take profit. So for the US 30 traders, are you guys scalping it? Are you guys swing trading it? Are you intraday trading it? Give me some feedback so I can know, what exactly you guys are doing with that. Because I know US 30 is heavily weighted against currency pairs. Check out H1 as well. All right, so we got a strong bearish engulfing off of that level. And another trick, I mean, you guys probably already know this, but I just like to reverse my chart sometimes, so just inverting scale. And sometimes you're able to see things that you potentially couldn't see before. Like this trend line definitely stood out to me more once I reversed the chart. You know what I mean? So now we can see we got a breakout. So potentially, price could come back and want to retrace if it does break this zone here. All right, so one person said scalping intraday. So for you, you would be mostly using I'm guessing the H1 time frame, and then M15 and 5. So for you, the big things are going to be trend lines, and then understanding the overall direction from the higher time frames. For example, here we had this double top formation on the H4. We broke price action structure here. It fell to the trend line. You had some consolidation, but we also had lower highs and lower lows being put in this consolidation area. So potentially for you, these would have been setups that you could have taken with minimal stop losses off the trend line. Intraday, not touching US 30. Now I feel you. I don't trade US 30 either, because it's just, to me, it's too volatile. And then if you're using risk management, it's not making a difference on the amount of money you would be making. Because if I risk 1% on EUR USD and I risk 1% on this, it's still going to be the same exact payout. Once you calculate that correctly. But a lot of people just like to over leverage US 30 and then just blow accounts. So I guess, I mean, it's up to you. It's your account. My guy Jans, what's good, bro? But yeah, so overall, I do believe that we could potentially see US 30 roll lower off of these levels, potentially head back down to the low down here. What other pairs? Let me see. So I did GU, AU, EU, DXY, US 30. Are there any other pairs you want me to go over? I did GJ. And ask me questions too. If you guys have any questions, let me know. That way, because I know like the last webinars and stuff, we were going over like actual topics, like the building blocks that you guys need to be able to understand. So if you guys have any questions about previous information or, something that you want to tighten up yourself, just let me know and we can go over that. All right, somebody said gold. Let's check that out. All right, so this was actually the last markup that I did, I believe, on the weekly analysis last week, because I don't trade gold, so all this has just been sitting there. But we can see that overall, we see in this area of consolidation, and we are making higher lows still to push up. All right, and if we check on the daily time frame, we can see that price was maintaining levels of support in bullish price action. All right, so we overall broke the price action here. We started pushing up. We maintained this and pushed up above this overall, daily level here. So now I would basically be deleting this. Do you trade live? All right, bet I'll do USD CAD next. Do I trade live? Yes, I do. Are you still at FTMO? Yes, and if I am, how is it going? So FTMO is still going good. I think I posted it on Instagram or something, but I had a really good week. I made about like 7K in profit. So honestly, I didn't even trade much last week. Like I was just chilling, just planning stuff out because I gave away the free account to you guys, and basically I plan on doing another one soon. But I've also been researching other funding companies. So basically comparing them like FTMO, Funding Talent, the prop trading, and there's like one more, but basically I'm trying to see which one I prefer, you know what I mean, like which one I like the best, and then I'm going to go for another funded account, and I'm going to show you guys the whole process, and then that way we can actually compare them, you know what I mean. Like I know how FTMO works, but I can't speak for Top Step or the funding firms and like the other ones, you know what I mean. So I want to see them from the inside. I want to see like, do they actually pay you out? Do they actually like are they trustworthy, or are they just trying to get your upfront money and then they screw you over on the back end? So yeah, I'm gonna take that hit for you guys, and I'm gonna pay for the funding and see what happens. All right, so yeah, we have some pretty choppy price action here, but overall we can see that we're maintaining bullish structure here. So what I would do for this area is overall highlight these wicks right here. We can change that color. All right, so that could be a H4 zone. We could tighten it up. All right, then I just want to look at potential levels for the daily. So we see we have this long wick, right? All right, then we could drop to the H4. Do I help anyone trade in the challenge? If you want me to help you trade the challenge, you got to pay me. I'm sorry. Because like the thing is, like people think even taking signals you can pass it, which you might be able to, but the thing is there's so many factors that play into stuff, you know what I mean. Like when I'm trading, I'm locked in, you know what I mean. So for an example, if I'm catching a buy, I'm watching so many factors of that buy where like I can get out in a split second because I know what I'm looking for. But if you're taking signals, you got to wait for the signal to send. Hopefully you got good service, and another spike could happen, mess up your risk to reward. So when it comes to that kind of stuff, you definitely should be, handling it yourself, or whoever you give the account to, they should be handling that themselves. All right, so we overall have 2 daily zones there. I do see price taking this out for sure. Let me see. Waiting for updates on that. Thank you, brother. Keep going, charge, man. Hey, thank you, bro. I appreciate it. I'll check in on your channel too as well, bro. All right, so overall, we have price pushing bullish. So we could potentially either see price retest back here and then go higher, or we can just see it tap this zone. To me, it does look like way more bullish momentum than bearish at this moment. So I would see price potentially rolling up higher. Only thing I don't like is like these wicks on these candles. But we overall are potentially getting a reversal pattern here, which looks like a higher time frame inverted head and shoulders, which could push us higher and break through this level here. So just stay alert, right? So as far as trades, you kind of missed the best entries, I would say, because on a daily trade basis, you would have had your zone off of these wicks here. And once you've seen price close back above that zone, you could have snagged an entry here for a buy and rolled it up. Then also here, we get that double bottom formation, break above. We get the retest of basically the neckline, form a new level of support on H4 and push up. So overall, if you missed this potential trade here, you could have gotten in on the retest on like the H1 structure here. Or if you missed that, potentially wait for another pullback to push up. If we don't get that pullback, we may just have to wait until price hits this and see what happens. Do we get a retrace? Do we continue maintaining higher lows and price action on a lower time frame to push us through it? That's the things I'll be thinking about. All right. So yeah, let me know, guys. Let me know if you have any more questions. Also, I mean, if you guys have any questions about anything else like psychology, just let me know. All right, so we have our level on the daily here. We also have a level off of these wicks up here. We see the analysis. Thank you, bro. I appreciate you coming in. You already did US 30, bro. It'll be on the recording for sure. So overall, basically what I'm trying to do is find the highest points of price, right? All right, so let's go back to the daily. Yo, Jans, so my weekly webinars are every Sunday at 2 p.m. PST. What's my risk management? So my risk management for the FTMO account is 0.5%. So I risk $500 on the $100,000 account. And my risk to reward just depends. Sometimes, like usually it's around 3 to 1 or above, but there are some of those trades and entries where like you realize you were in the wrong direction or something. So, you close early. So yeah. Let's do H4. Okay, so H4, we had our last lower high here to lower low. All right, so we pushed above it and we started maintaining new higher low points in H4 structure. So this is potentially telling me that we want to go higher. All right, so overall, this will be our next level of interaction up here. Okay, so we now have a level of H4 support. All right, and you guys, if you guys remember from the last webinar, like these are also supply and demand levels. Okay, so we draw it off of the wicks, but you know, all this is an area of interest. So you can see why price reacted off of where it did. It makes perfect sense. You know what I mean? Same thing here. You can see why price reacted off of what it, you know, off of what it did. Another way to think about this too is just like when you think bullish engulfings or bearish engulfings, just think supply and demand, think order blocks, just like this. You know what I mean? So combining that with the overall flow of the market will help you know where to take profit, you know, where to look for new entries, etc. Now, if you guys are still confused on that, make sure you check out the last webinar because I dove pretty deep into it, so that you can get a better understanding of how the market moves, what it reacts off of, etc. Advice we will give traders who are scared to place trades and miss their setups that goes in their favor. So Linda, for your question, as far as being scared to place trades, that comes from not trusting your system or not having a system. I would say find, if you, I don't know if you already do or don't, but find a mentor, somebody that, you know, has done all the hard stuff, has worked through, you know, all this, the experiences that, you know, will help you from just learning from them. Because for example, like let's say, you know, I say take a trade off the zones after this happens. It sounds good, you know what I mean? But until you back test it yourself and have somebody to walk you through it and teach you why it works, you know, why, like it's a science to the markets. It's not just like, oh, this is a black candle, this is a green candle, it went up, so it should pull back and we can get an entry. There's a reason why the market reacts from every level it reacts from. So I would say number one, if you don't already, find somebody who can, you know, answer your questions on why the market does what it does. And then number two, build trust in it by back testing. So, you know, I don't know how much time you've been trading or like how long you spend on the charts, but when I first started, I was spending like 8 hours. And I actually, like the other day, I just broke my record. Like I spent 19 hours on the charts. So it takes time, it takes grinding, it takes focus, you know what I mean? So it's just muscle memory as well, but with your brain, if that makes sense. You know, you're just developing those new pathways to trust yourself. So yeah, that's what I would say. How much would you recommend someone to risk a day? I want to be more disciplined in trading. So for Tamilia, what I would say is it depends. So do you track your trades now? Do you have any like proof? Do you have a track record of, you know, your results up to this point? For an example, if you know that you're overall profitable, and let's say over the last 6 months you've seen consistent growth of, you know, 2% on your account per week or something like that, then I would say, okay, you can increase your risk. So I'd say you can go from risking like 1% to 2 to 3%. If you're not consistent yet, you want to risk as little as possible because you want to be able to stay in the game long enough to learn from it. So if you're not consistent, I would say honestly, just stick to 0.01s or 0.1s and just like practice, you know, build that confidence. So that kind of goes into Linda's question too. Like for both of you guys, instead of thinking like, you know, I have to make money immediately, think about I have to trade my plan as well as possible because that's what's going to bring the money. Like, for example, if you master a trading strategy with a 0.01, not only you'll probably master it better because all the emotions are almost gone because you're not seeing huge fluctuations in capital. And I mean, like, even if you have a couple $100 in an account, like the mindset is just different because as soon as you put like a decent amount, like 500, 1,000, $2,000 in an account, you're automatically thinking, yeah, I want to make a couple hundred a day. I want to replace my income from my job. I want to, do all these things. And it can happen, but it's not likely when you're still trying to learn how to trade, when you haven't even found consistency. So when you see people on YouTube or even like Instagram and they're talking about, oh, I flipped this account from $80 to $1,000, they probably did that one time lucky. You know what I mean? They caught one nice push. But if they tried to do that consistently, they would easily lose their money. You know what I mean? And blow the account. So I would definitely say keep it low at first. Like literally, if you could, like if you're not in an extreme hurry, just trade 0.01s for like 2 months and just focus on the strategy. And what you're going to learn from that is that you'll be able to hold trades longer if you want to, and you won't be emotional to enter those trades and see how they play out. Yeah, Thomas, is true. If you chase money, it runs for sure. This guy's getting smooth and simple. Thank you, Jans. I appreciate you. But yeah, like it's very, very true. Like in my journey so far, I would say like what I've realized is like as I trade, as I grow as a trader, I leverage less and I risk less. And that could also be because of FTMO and all that as well. But like when I first started trading, I was looking for like Trader's Way accounts, which are horrible. But I'll get like 1,000 leverage, and I'll want to over leverage and see like, okay, with this $1,000, can I make 10,000 by the end of the month? And it's just not logical. Like hedge funds are making like 40% a year at best sometimes. So it's like for us as traders that can potentially hit 40% in a month, that's already amazing. But we don't even see that because of the amount of money we're trading with. You know what I mean? So now it's pretty cool with the prop firms and all that. It definitely makes the journey easier to hitting those bigger amounts. But that's a whole nother story, because as you see bigger money coming in, you also have to work on the psychology of that money. You know what I mean? It's not just like you make 10,000 tomorrow and you're leveled up and you always make that money. It's like a constant journey because you didn't prepare yourself for that money. You know what I mean? Like mentally, you don't know how to handle those kind of returns. You know what I mean? Like if you're used to making $1,000 a week and all of a sudden you're making 10K a week, you just 10x'd your income. You don't know what to do on that level yet. You know what I mean? So you'll likely sabotage yourself or, revert back to trading in ways that don't, excuse me, damn. But you revert back to ways of trading that don't really, help you. All right, let's see. How long you've been trading? How long you take to be disciplined? So I've been trading, I know for sure 5 years, but like somewhere around there, like 5 years, maybe 6, somewhere around there. But I seen my first consistency. I'll be honest, like I'm a very disciplined person. So like when I dive into something, I dive in like full fledged. So like when I first heard about trading my first year, I literally spent at least 8 hours a day for the first 6 months. And that was literally consistent. Like I may miss one day a month or something like that. I was deep in it. And then after that, I kind of eased up where, some days I'll do 3 to 4 hours, other days I'll do 12, other days I'll do 1, like it was just all over the place. Kind of just depended on, how I was feeling and stuff. But after doing that, I feel like I got so much chart time in that basically my eye was a lot more trained. You know what I mean? So I would say that first year, that's when I started seeing the potential. Second year is where I started seeing the consistency and, becoming profitable. But I would have those spells like I'm explaining to you guys where I would be profitable and then my discipline would slip. You know what I mean? And then in that moment, I would be like, oh, I built the account from $1,000 to 2,000. Now I can do it again to 4,000. And I'm thinking, oh, that's how you compound. You just keep growing it like that. And then I'd over leverage and then mess up the account. You know what I mean? So then it was like I was consistent, I was profitable, but I would hit this level and then I would reset myself. So basically, I just got to the point I was just like fed up with myself, like to be honest. And yeah, I just like literally had a talk with myself, and I was just like, look, if you're gonna do this, you have to treat it as a real job. Like you can't. I mean, it depends on the job you got, I guess, but you can't half-ass your job. You know what I mean? Like if you go to work and you expect a paycheck, like you have to do what you were told or whatever, you know, is in line with your job. So it's the same thing with trading. Like if I'm not willing to follow the rules, then I'm not going to make money. And it's just that simple. You know what I mean? So trading is extremely rule based. It's not something that you want to be guessing on. It's not something that you want to be subjective on, which is why I don't use indicators. Indicators make trading extremely subjective. When you trade subjectively, it allows a lot of variations to happen in your results. So like your risk to reward, your overall win ratio, it will always be changing, and you won't be able to get a correct analysis of it. Because let's say, you know, I'm trading I don't even know, head and shoulders patterns, right? So let's say we're trading head and shoulders patterns, but you know, this head and shoulder pattern looks like this and it breaks structure. And then another one looks like this, you know, and then another one looks like this, you know, and consolidates, then drops. Like none of these are the same. So now that you're saying you trade this as a strategy, which ones are you taking? You know what I mean? What's a head and shoulders pattern to you versus another trader? You know, so when you trade only subjective things like that, instead of like hard, you know, like concrete things as far as like, did this make supply? Did this make demand? Did this make a wick? What does the wick mean? This is all stuff that cannot be changed. Okay, so a wick is a wick. You know what I mean? It's, of course you can analyze it, I guess, differently, but we know that this was the highest price in this push before this low happened. So I would say focus on things like that for sure. But yeah, I would say as far as overall consistency and stuff, I would say like 2 years was my point where I really started seeing a lot of consistency. 3 years, I started doing really good. And I started with like a small account, like 2K, and was able to build that. And yeah, that's where I started seeing my real consistency. But it just sucked because I'm trading such a small amount, and then you see people trade like making these huge returns, and it's like you want to over leverage and stuff. So I would like really have to control myself with the discipline on that part. I don't think it's ever one of those things where you can just be perfect at it. It just continues, like you just continue growing. You know what I mean? So yeah, like I would have, once again, I would have spells where I'd over leverage and then lose, you know, some profits. But I feel like as the years went on, I was able to catch myself quicker than before, where like, you know, you get carried away and then you revenge trade, next thing your account's going. So I would say as the years got on, I kind of matured in that way and realized like, when are you going to learn from your lessons? You know what I mean? Like the same things happen every time you over leverage, whether we like to, you know, admit it or not. Like one of two things: you make money or you lose a lot. You know what I mean? You make a lot of times, even when you over leverage, you don't even make a lot of money because the psychology messes with you. So for an example, let's say you use a one lot on like a $500 account. You're seeing huge amounts of your account fluctuate. So now instead of actually holding the trade for the potential take profit that you should have, you're going to be getting out early because you're like, oh, I'm already up, you know, $50 or $100 or whatever. I'm gonna just close. Well, now you just open yourself up to a lot more risk in the market, because let's say your stop loss was 10 pips. You're risking $100 and now you close out at $50. So that means your risk to reward ratio is now negative. So if you continue doing that, you're working against yourself. Like you're literally making it gambling where the markets will win every time over the course of the next few trades. So basically we repeat these cycles and we don't realize it until it's too late. But it's like, I think that's where like the self work, I guess, comes in, where it's like whether you meditate or you know, you journal, whatever it is, but like self-awareness, tracking yourself. What are my habits? Why am I doing the things I'm doing? You know, figuring out, was this money I actually needed to use for something else instead of putting it in a trading account? Like, am I trying to rest the process? Because the thing is, like, people go to school for 4 years, right? And they don't even question it. You know what I mean? They don't question um, paying for 4 years of school and getting no return immediately. But as traders, like, we try to rush the whole process where, like, even though, like, we try to rush it, like, we hear about Forex and then we're like, oh yeah, I got to make profit tomorrow. And it's really not like that. Like, it's a science. Like, if you can master that, if you can master the science, then you're going to see huge growth over the next few years. Trading isn't one of those things where it's equivalent. Like, for an example, you go to work, I don't know, at like a food place and you get paid per hour. You know what I mean? And that's all you get paid, and you may get a raise or whatever, but it's just flatline. So it's like, no matter if you work 8 hours, today, you get paid that same base pay. With trading, it's not like that. It's like exponential. So if you guys ever read a book like The Compound Effect, I truly feel like that's how trading is. We're like, you start out at this level and you're like, okay, I made like $2 today, but on my $100 account. You keep that consistency. And then, opportunities pop up like FTMO and, all those things. And then you're prepared because you've done the work. You've worked on your discipline. You know the strategy. You trust your entries. And then, all of a sudden you're like, okay, now I can risk 1% of 100,000. And, now I'm risking $1,000 per trade. And, now I'm seeing, bigger numbers. You know what I mean? So it's like a staircase type thing, but you have to prepare yourself before just leaping to that. So I wouldn't even say take FTMO until you see consistency on a personal account. Let's see. Thank you, Derek. I appreciate you. With the current chart, would you view it as an uptrend as it broke previous high, or as a higher time frame retracement of a downtrend? So for me personally, if I get a 2 candle pullback and then a new low, that would be my lower high to lower low. So this would be a break of structure right now. So this would be a bullish move. We made a potential higher low here, 2 candle pullback to a higher high. We just need to see a candle close. But yeah, so this would be going bullish to me. And I think I already broke it down, but basically this would be my next level of interaction. So we have a supply level here, which price tested and then, retraced. And then we also have a demand level here. All right, so potentially now that we tested it, so basically price just did this, boop, boop, and then we could potentially do something like this and keep moving up. But yeah, I would say like 95% of trading really like is like psychology, because the rest is literally, it's just like anything else. You're just learning a skill set, right? Like after you look at the chart so long, and especially like you get around the right people that actually know what they're doing, you'll start to see the market in certain ways. All right. Does anybody else have questions? Another concept that I want you guys to really jump into is really researching what it means to buy low and sell high. All right. I want you guys to actually research it for yourself and figure out what it truly means, because I think if you guys understand that concept, it'll truly blow your mind. So what somebody brought to my attention was that we trade the markets, right? But every day in our life, we're trading. Now, how many of you have ever gotten an ad in the mail, right? And the ad is saying like, oh, Walmart has a sale on TVs, right? So that's a discount price, right? So you're getting it on sale. This is the same exact thing we're doing on the charts. We want to buy at a discount price. Okay, so we want to buy it at a low, at a discount price, and ride it up. Okay, and then we want to sell it for a great profit. Okay, that's all it is. Okay, and we want to do the same thing vice versa for the sells. We want to get it at a premium price, and sell it to others. So when you think of the markets in a way of like, you know, getting a discount, like you in your normal life, would you want to pay more than something's worth? You know what I mean? Like if you're buying a notebook and it's usually priced at $10, but you see today it's priced at 40, would you still want to buy that? I'm pretty sure the answer is no. So when you think about it with trading, it's like, why can't you be patient enough to wait for price to pull back to the entry you know you should have waited for? You know, just that kind of stuff will help you from a lot of losses. Where do I normally take my entries? So I take my entries from zones and supply and demand levels. So basically, just to make it simple, we have daily levels, right? So price just moves between supply and demand. Basically, the difference in like support and resistance and supply and demand is support and resistance is just one simple line. Price does not react off of one simple line. It's a concept that allows you to understand like the movement in the market, if that makes sense. But if I put one line here, how would you know to enter off of this support when price broke through it several times? You know what I mean? So supply and demand is a concept that is based off of an area or a range, which is what I mark off with zones. So if we have this daily range here, basically I know that if the daily level hits this zone, let's say it starts retracing, well, it bounces from support to resistance, right? So if we leave resistance on daily, we have to find support. It's that simple. So if we have to do that and we already left resistance, where are we headed to next? All right, so we're headed to support, which means now on a lower time frame, we can trade the fluctuations in price all the way down to this level. So on the H4 time frame, this daily leg of structure is not going to look this clean. Instead, it's going to have pullbacks. So it's going to give us levels to get in at the best price before price crashes. So that's all we're taking. All right, so we're waiting for price to establish in a downtrend these lower high points. Once they establish, we draw a zone off of the wicks, wait for the pullback to that zone, and then we get the drop. All right, and then vice versa for the buys. So, I mean, I could just flip the chart real quick. All right, so if we leave a level of resistance on the daily time frame, we fall to support. Once we hit support, I expect it to go up to a resistance. On that push up to that level, we can see price put in higher low points, right? So it makes exhaustion. Okay, when the market's ready to continue, it exhausts. So we draw our zone off of the wicks. All right, and we form that zone, and then we push up from it. So we get in on the retest here. So I went into deeper detail on my actual entries on, I believe it was like not this last webinar, but the one before that. So check that one out. I think it's 2 of them, but I really dive deep, even, all the way to my entry time frames on like the 1 minute and 5 minute. This one today is going to be probably a little bit shorter than the rest of them. I think it would be cool to go over more like psychology stuff on this one, because I really haven't went over much psychology, in these webinars, I think, besides the first one. So if you guys got any more questions on that, let me know. And then, yeah, what I'll start doing also is I'll start, asking you guys what you want me to go over in the webinars. That way I could really plan ahead and like, fine tune the information to exactly what you guys need. Do you have any advice on how to avoid being faked out / getting into early on the lower entry timeframes, 3/5 minute? So as far as getting faked out, I don't believe there's a such thing as getting faked out. The reason that you're taking L's is because you don't understand like fully the levels you're trying to trade. Okay, so the market basically moves in, I'm sure you guys heard of like fractals before. So like, like a snowflake, for an example. They say if you put it under a microscope, you can see an image of the whole snowflake within smaller fractals within that snowflake. Trading is the same way, right? Where like if I have different legs of structure, We can see this lower high pattern within another lower high pattern. You know what I mean? So that's all that's happening is this kind of stuff. So I believe potentially what your issue could be is that you may be trying to sell it. For example, let's say you're trying to sell it, here, but overall you're selling it too low for the overall higher time frame structure, because now that's reversing and pulling back on you to retest a higher point while you're thinking that it's going to continue just a sell off. So I would say focus on higher time frame structure. So for example, let's see. Let me break down. I'll break down, for example, this entry right here, and you can see how I would catch it and why. Okay. So overall, if you see, we're in an uptrend structure, right? Higher lows to higher highs. So if we drew a zone off of this level here, what you would want to do is drop down. Select you can do 5 minute, right? So as I was saying, right, like the market just moves in what is called like fractals or like price action patterns, right? So overall, for price on the higher time frames to go from this low to this high, the lower time frames had to make higher low and higher high patterns. Okay. Now, once we got to this high, in order for the higher time frames to go from bullish, like a bullish push to a bearish retracement, that means the lower time frames had to break structure. Okay, so one thing that could potentially help is just zooming out. So you can see how much data I can see here, right? Now, if I was super zoomed in one area, it makes it harder to see the bigger picture of the higher time frame. So number one, I would say analyze the lower time frame zoomed out a little bit more. And overall, you're looking for higher time frame levels to be tapped by the lower time frames. All right, so basically the reversal off of this level has to start from like the 1 minute time frame. Okay, it's not going to start from the H4, even though this is the H4 zone. The H4 has to fall to this level. M1, M3, M5, M15 have to set up for the reversal in order to push that time frame away. Now, another rule of thumb, if you're looking for a reversal, or let's say a continuation, right? So in this case here, let's say you're looking for a higher low to be formed on the H4. So it's at a pullback point, and you're potentially thinking it's going to pull back and then continue. You're going to have to see a reversal pattern on the lower time frames before this is going to take off, for an example. All right, so rule of thumb for you guys, and you guys can back test this. If you want to see a continuation happen from a higher low point or a lower high on the 4-hour time frame, you're going to need to see an M15 reversal pattern form. If that does not form, 9 times out of 10, it's not ready. Okay, so if you don't see a head and shoulders, a double top, double bottom, any of those patterns form, it's not ready to be traded, because basically what's going to happen is you're going to take it, like you're going to take a buy, and then the market's going to come back and stop you out to form a pattern. So potentially it'll form a head, then a shoulder, and then go up. So that's something to keep in mind as well. So H4 correlated with M15 for reversal patterns. H1, I would say you could go down to like, I don't know, M5 maybe. You could probably still use M15 as well. And then daily, I would say you need to see at least a pattern on the H1 to H4 time frames. So that's something to keep in mind. Daily levels, like if you're just catching a retracement, a lot of times you can just catch the momentum push. But that is a good rule of thumb. Let me see. Psychology on discipline would be a nice touch phase. Do a video, that topic for sure. Remember that the institution can see these levels too, and they're trading to make their money off of the orders you place. So they push the market past where the obvious orders will be placed. Yes, that is true. But the thing is that institution and banks aren't even looking at charts. Okay, so all they're looking at is an order book. They're looking at literally, they walk into the office a lot of times and it's just the levels on like a spreadsheet. You know what I mean? So it'll say the prices, it'll say 1.24900 is a level of demand. Okay, so they would say, okay, we want to put in 100,000 orders if price hits that level, or we'll drive price to that level to get the best price. So yes, sometimes the market will potentially, fight for the best price, but if you really understand how the market moves, you understand exactly why things happen, and it's never an accident. That's the craziest part. Like any wick you see in the market that you think is an overshoot, I guarantee there's something that explains it in the past history. I guarantee it. Nothing reacts off of pure randomness. It seems like it, but it's all like human nature. It seems random, but it's literally a cycle, just like the charts. Um, if you don't take the risk, you won't take the profit. Oh, let me read yours. I sometimes freeze up and don't execute the trade even when it meets my rules. Any thoughts on how I can change that? If you're trading live, just trade demo for a couple days to a couple weeks. Build confidence in yourself. Because if you're scared, most likely you're trying to risk too much, or you just don't know your strategy. You don't have confidence in it. So build confidence by back testing, demo trading. Number three, you can visualize on this. Like if you know exactly what your entry is supposed to be, screenshot them on your computer, look at them, close your eyes, try to visualize that same setup in your head, and then picture yourself taking the trade. And all this stuff is practice. It's like muscle memory for your brain. So it's going to start making those connections so that next time it's not as hard to take that trade. That's why sometimes you see the obvious move, you take the trade, it goes against you, even though you did everything right. And then it goes where it was supposed to after you stopped out. Yeah, so that's the thing. Basically, once again, once you truly spend enough time on the charts and you start understanding these levels that the market truly operates off of, what you'll realize is that you think it was an overshoot of a level, or you think it was, these things, but there was actually a price point that the market wanted to retest. And there's actually, ways to be able to understand why or where it's going to reverse. So instead of you taking an L in this place, there's ways to understand, how to catch it exactly where it wants to reverse. Now, with that kind of stuff, like I said, you're gonna have to start researching for you guys, like for yourselves. Why, like, what are bank levels? What are supply and demand? What is liquidity? All these concepts. Because if you really think about it, right, like wicks in the market, especially at the extreme highs and lows, are not caused by us. It's not caused by retail traders. But if we can understand why, like where they will form in the future and why they formed in the past, we can get in potentially at the same points as these bigger players. Yeah, no problem, Lender. All right, and then to answer the question about discipline, so basically as a trader, like with trading, you trade the same way you live your life, if that makes sense. Like the best way I can explain it is like when I started like taking discipline serious in other parts of my life, I got stronger. So for an example, like I went on like a workout journey, like lose a weight loss journey, like all that stuff in like the last year, 2 years. And from that, I feel like I've gotten way more disciplined in other areas of my life. I would say trading definitely got easier to control, but I still do have those moments of like where I over leverage, or like, I have those impulses where I want to do what I know I shouldn't. I don't think that ever goes away. That's just like being human and having emotions. But I think by being disciplined in other areas, you build integrity for yourself. Like you build self-integrity and you build trust in yourself. You know what I mean? Like you can't even trust yourself to make the bed when you leave in the morning. You know what I mean? Like how are you going to trust yourself to now run when you're tired? And then how are you going to trust yourself to potentially use the correct lot size when the last month you've been over leveraging heavily? Like it's all discipline. You know what I mean? Like all of it factors into the next thing. So like what I like to do now is like fasting. So fasting, I feel like, is one of the most extreme ways to prove discipline in your life. And once you do it, you'll be like, oh snap, like I did that. Like I can literally, like, basically, like food urges are one of the strongest urges we feel, right? Like as soon as we go a couple hours without eating, our stomach is like gurgling and stuff. We're like, oh, I want to eat right now, like I'm hungry, blah blah blah. If you don't eat, you start getting hangry and all this stuff, right? So if we're able to control ourselves and control our emotions and say like, no, I'm gonna go without food for 24 hours, 48 hours, 72 hours, and I'm going to fight through it. You know what I mean? That's one of the, to me, it's not easy, but it's one of the easiest ways to correct discipline very quickly. Because not only does it prove, self-integrity to yourself and build confidence, but it also helps with, resetting the chemical balances in your body, like dopamine, serotonin, all these chemicals that are like happy, like rush into your brain when you're happy or like stimulated. So it helps with that. And then it also can help release fear in your body, which is a crazy thing that I found out recently. It resets, and I'll have to send you guys in the group a article on it. But basically, if you do, I believe, a 24-hour fast, they said that in the study, it helped reduce overall fear and stress and reset those receptors in the brain. So for those people also that were saying they're too scared to enter a trade, that could be a good option for you guys. I appreciate you, bro. Appreciate you, Armand. TJ, do you consider physiological levels alongside your supply and demand levels too, or psychological? Okay. No, I personally do not look at psychological levels because just like you said earlier, or my bad, it wasn't you, but it was Demigod. He said like price will get driven through just to beat the previous bank's prices or whatever. So a lot of times, like I don't look at whole numbers because it's cool that you know the whole number's there, but how are you going to enter that? And you're just going to enter just because you see that whole number. You know what I mean? Like, what are your confluences? So I don't use that as an actual entry technique. Instead, for myself, like I would use that as I honestly wouldn't use it. I feel like it's just one of those added things that don't mean much when you can literally just read price action and know exactly what price wants to do, where it's going to do it, and why. So, for an example, even though like, okay, we see this is 1.2500, so why didn't price wick 1.2500 and keep going up? Or like, why didn't price stop at 1.2500? Like it's all like all these things. Like to me, it just adds extra like confusion. To me, I want to make it as simple as possible. I want to trade from the same levels that the banks trade from. That's basically, that's all I want to do. Because when you trade with the banks, you get the momentum. You get the momentum, you get your pips, and you get out. You don't want to hold trades for a long. Like, don't get me wrong, swing trading is different. Like, if you want to swing trade, dope. It's a great way to grow capital. But I'm saying, like, if we're trading purposely for scalping or intraday, we don't want low volatility in the market. We don't want to be sitting there and the market just moving sideways. We want to get in at the levels of momentum where we have the best chance of, huge risk to rewards. So that kind of goes back to the AU breakdown where like we can trade in between a range and risk a lot more losses, or we can trade from the same outside levels that the banks are trading from off of these wicks. All right, any more questions, guys? And I will, I'm also working on that video, like I said, about the different trading firms. So like FTMO compared to funding talent compared to the prop trading, like all those different ones. It's just a lot. They have a lot of rules. You know what I mean? Like they all have their own set of rules, and I want to make sure that I'm telling you guys 100% the correct information. So I was working on it today, but like funding talent alone, like their rules are like all over the place. So like I'm working on that, but hopefully I'm trying to have that out this week for you guys to give you guys a better understanding and glimpse of like which route you guys should take. Um, but yeah, I'm noticing like more and more funding firms are popping up, which is a good thing. It adds more like possibility and opportunity for us. But the thing is, we also have to watch out from getting scammed now. So yeah, I'll definitely keep you guys updated on that. Let me see if there's any more questions. Yeah, no problem. You know, I love sharing, you know, the knowledge that I learned. So for sure. Yeah, Demi, you missed the markups in the beginning, but this will be posted on my YouTube channel, so you guys can watch it there. Thoughts on fib levels? So I personally do not like using fibs, especially like the way they're like taught to be used in like the mainstream you know, like trading strategies where it's like the 50%, 60, what is it, 68.1 and 78.6 and 88 point, like basically the market runs on an algorithm. And once, like basically a lot of the information that you'll see online, especially the free information, will be put out by the brokers and the institutions and the hedge funds that are trading against your positions a lot of time. So what does that tell you? Basically, they're going to give you, you know, the numbers. Like they're going to give you the Fibonacci levels or, you know, the information that will help them take advantage of you. So that's what I'll say on that. There is a correct way to use fibs, but it isn't a huge part of my analysis. Funding talent, new challenge, have less rules. I did hear about that. So I'm going to look into that. Like I said, I'm going to take another challenge. I don't know on which firm yet. I was thinking funding talent. So I'm going to look into that. On topic of confluences, how many is the minimum you should use? Usually for my trades, I have at least 3 confluences, whether it's like a zone tap, um, like my entry strategy, which I put this in another webinar. So I think it's 2 webinars back. You can check it out. But yeah, so my entry rules are met. That's 1. And then usually like I look for like some kind of trend line, which could be 2. I look for the zone. Yeah, that's really it. Yo, that's dope. I don't know. Is it Pachi? Pachi? Yeah, I did hear you can trade news and all that. So I'm definitely going to look into them. I just didn't like the whole thing that I read about them, you know, saying if you trade inconsistently, you can potentially lose the account. Because, you know, like what if you just, I don't know, you have a bad week or something. You're trying to just make back a little bit of money, you know, like let's say you're usually an intraday trader holding trades for a couple hours, but you know, you wanted to make an extra 50 bucks on your account or you know, whatever it is. So you start scalping and then they try to, you know, close your account because they said that you're inconsistent in the way you trade. So that's my only thing with them. But I did hear like on these new accounts, they don't track consistency or whatever. So if that is true, I may go with them. Well, all right, guys. So we got like 4 minutes left. So if you got any more questions, let me know. If not, we can start wrapping this up. Let's see. So yeah, see, I feel you, Pachi. I feel like FTMO, like they're kind of like the industry standard. You know what I mean? Like they're I appreciate their professionalism. I appreciate the fact that, since the beginning, I haven't had real issues with them. It does suck that they have the limits of, trading news and all that kind of stuff. Hopefully, with this other competition popping up, they, update their rules and all that. Cause I don't mind, getting 70% profit instead of 80%. Like, yes, it would over time add up to a crazy amount, but like my end goal is not to trade FTMO for the rest of my life. Like, it's to leverage these opportunities to put myself in a situation where I can fully control, everything. Because once you do that, you get 100% of what you make, and then you withdraw it straight to your account within a couple of days instead of having to wait for bi-weeklies or monthlies. So to me, I see it more as just like a stepping stone, and I have a plan of how I'm going to utilize it, and that's another thing. So I'm about to lock in for about 3 months to 6 months. Probably going to go a little bit ghost. I'm going to still do my weekly webinars with you guys. I'm still try to drop the YouTube videos throughout the week, but I'm going to be locking in because it's new levels to break. I actually, if you guys know or follow me on Instagram, I actually, paid for, mentoring from, a trader that I look up to. And the thing, like, that's the thing I see a lot of times too, is that people are so afraid to invest in themselves. And it's sad. Like, you go invest in some shoes, you invest into this, but you don't invest to the one thing that will pay off more than anything else, yourself. You know what I mean? Like, I can't trust anybody else except myself as much as I trust myself, if that makes sense. You know what I mean? So why not better myself? Why not make myself the valuable thing? You know what I mean? So I did end up, getting mentored by, a trader I look up to. And, I feel like my knowledge, my focus, my discipline, my everything is just continuing to grow. And I do want to, continue giving to you guys and helping you guys out. But yeah, I will be focusing more on my own journey as well to break through these next levels. And I will be documenting some of it for you guys and like showing you guys the process. But yeah, it's level up time. So I'm looking forward to seeing all you guys level up as well. Even though FTMO is Apple, funding talent, Android. No, that's for real though. That's how I think of it. Jans, my Instagram is Rayvon FX, so RayVaughn FX. But all right, guys, you got any more questions? We're going on, I think, like an hour and a half. Yeah, I feel the same way about FTMO. Like, I trust it more. Like, you know what I mean? All right, you guys, though. So I'm gonna wrap this one up. Looks like not really many questions left. Um, Yo, Demigod, if you want to learn from me, you can go to technicalguides.com. The link is in my description of this video. You can follow me on Instagram at RayvonFX. But yeah, hit me up, man, if you truly want to learn. I don't want to work with anyone who is not disciplined, focused, and ready to level up. I honestly don't have time for it. It's like I said, you know, I'm about to what I got planned for myself is crazy. So I'm gonna just put it like that. Anybody out there who truly feels like they're on the same wavelength, wants to grow, wants to, you know, break through new levels, I'm perfectly fine with working with you and helping you through and guiding you. London, I appreciate you. You're definitely welcome for all the information. Like I said, I don't want to make every webinar exactly the same. So, you know, I want you guys to be able to watch it as like a series almost, and you guys learn something new from every webinar, not just like me saying the same things like zones, you know what I mean? So hopefully you guys are getting that spread of value from, you know, the videos I'm doing. Chris, same thing, bro. So you can hit me at technicalguys.com or on Instagram at RayvonFX. Um, yeah, man. I'll probably be closing mentorship very, very soon as well, just because I'm gonna lock in with the people who I have. And, you know, I don't want to, I don't want to make this into something where you guys can't get that hands-on experience with me as, you know, a mentor. So definitely, guys. Thank you, Jonathan. I appreciate you for hopping on, bro. We got to catch up for sure. All right, guys. So I'm going to wrap this up. Thank you guys all for coming on. I appreciate it. And I'll see you guys in the next one.